during COVID, we recognized the need for financial inclusion, financial literacy among the general populace. But of course, it was even more especially pronounced among women, and especially women that are less privileged, like those that are in the market spaces. Also, increasingly, we've seen our partners very interested in women, and our partners being, most importantly, the financial services providers, our banks who are our members, but also development partners. And it's very important for us as an institute that we align with the general requirements of the community, of the country, but also of the sector in general. I wouldn't say they're significantly different from women in general, but clearly the issue of being financially literate, financial literacy is very low. And because it's very low, it affects their ability to access. They wouldn't know where to access these services. They wouldn't know what to access in particular, and they wouldn't even know about the pricing. They wouldn't be able to negotiate that. There is also general fear. We know very many people who fear to move, for instance, in banks or anything, an institute like that, because they do not even know where to start from or how they will talk to anybody about that. Of course, we still have issues of, we know that there are options now, the digital options, but they're also, it's very significant that many of them are not digitally literate. Having said that, you also have the significant issues of the fact that many times you want financing and financing through loans. And of course, many of them do not have collateral. I think that is a standard, something we know by standard. They do not have collateral, and therefore they would not be able to get significant financing for the services that they provide or for the businesses that they conduct. So, and of course, there is also the cultural issues that we keep talking about. Many of them would have to consult their spouses before they can get a loan. And even then, when they get the money, you will find that the spouse will need a piece of it before they can actually utilize the money. And sometimes it might even be challenging to pay back, because as they get the money, the spouse might want to have part of that money before they can go ahead to pay. So it's a myriad of challenges that they have that affect their ability to access these resources. Some of the greatest changes in policy, if you talk about the Payments Act, National Payments Act, that has ushered in digital finance, mobile money, mobile banking. This has been very significant, because then women are able to access these services even if they don't walk into a banking hall. They're able to get things like, they can do micro saving, they can get micro loans, there is also micro insurance. You're able to save even 500 shillings a day. And you're also normally prompted, you can even be prompted, I think because of artificial intelligence, you can even be prompted, depending on your cycle, you can be prompted on getting a loan if you'd like one, which makes it very easy. There is also the fact that now, if you look at the KYC, you can now easily open an account over a bank account over a phone. So usually you would find that these people have been accessing services at different levels. They would access services from their, what you call village savings groups or associations, or just a small, a small group that is saving together, or saving and loans. So, but now with this digital finance, they are able to go above that, because usually the terms, as you know, are not very good in the tier 4 area. Now they are able to access them across the board, both tier 4, tier 3, and whichever. So I think that has also been very significant in supporting inclusion. So if you look at the broad spectrum of financial services, yes, many times you cannot able to get a service if you don't have a bank account. So for me, having an initiative where you can open a bank account without moving from where you are, these are busy people, They are usually sole business owners. So when I leave, if they are to leave their stall, that means they are losing money. It means they may not even be able to trust them because the neighbor will be selling for themselves. So being able to open a bank account or having a mobile money account from on their phone at a place where they are, I think that's extremely innovative. It's also innovative, the fact that you can get, a loan up to 5 million shillings. You can get it digitally right now as we speak, which is quite good. The unit trusts, something that was previously, and that you could not access, they're actually also able to access elements like that. That might sound sophisticated, but with increasing knowledge, at least we know that that is available for them. Insurance, health insurance, micro insurance. Who knew that somebody like that could be able to have insurance at their, where they are found? Normally you would find an agent having to come to you, talking to you about insurance altogether. And the cost was also quite high for insurance. But now when we talk about micro, it means that somebody can save as little as 1,000, 2,000, and then they are getting insured. I think these are all very, very innovative. Savings too. Under normal circumstances, these women used to have what you call a piggy banks or a box, wooden box where they are keeping their money. But now on a daily, just next to you is a mobile money agent. From your market, you can go put money on your phone and immediately after that, send it to a savings account. And interestingly, trust was also a big issue. Trust of financial services sector or banks, institutions. But now on your phone, you can see, especially mobile money, they send you a statement and they can send you interest as you earn it. And that increases trust. When it increases trust, it also increases the propensity to access financial services. I think all these things are quite innovative. I think technology can be leveraged further in different ways. First and foremost, technology enables the industry to access data, to access data, to know locations. The KYC gives you an opportunity to know the age of this person, of the woman. So it is possible for us to leverage technology to customize products based on a life cycle, based on the location of a woman, based on and the life cycle that's on the business that they are undertaking. So all these things that can be utilized to create a customized product that will benefit the woman, even if they knew or they didn't know. Because and of course, education comes with it. Financial literacy, technology can also be used to disseminate information that is relevant for them. Technology can also be utilized to give customized education because you can see how this person interacts with money. If they have got a loan and they are not paying a loan, it's easy to remind them, it's easy to educate them. If they have got money that they are saving on a normal account when it could be maybe put on a fixed, I don't want to use the word fixed, but sort of like one that there is longer term of keeping the money, as opposed to accessing it all the time. You should be able to. If you get somebody who has got an account with you, whether a mobile money account or whatever, and you can see that they can actually afford to go into insurance, it is possible for you to educate them about it in terms of sending information, but also to persuade them to move to the next level of their financial journey.